Most people invest their money in the wrong order, and that one mistake costs them hundreds of thousands of dollars over their lifetime. In the next 6 minutes, I'm going to show you the exact right order, step by step. My name is MG, and you are watching Finance Systems. Today, I'm breaking down the smartest order to invest your money, whether you're making $30,000 a year or $300,000. This is the exact roadmap that millionaires follow, and almost nobody talks about it in the right order. Hit that subscribe button right now, because this channel will change the way you think about money. Before you invest a single dollar, you need a safety net. This is your emergency fund. 3 to 6 months of living expenses sitting in a high-yield savings account. Why? Because life happens. You lose your job, your car breaks down, a medical bill shows up out of nowhere. Without an emergency fund, you're forced to sell your investments at the worst possible time. With one, you stay in the game no matter what. For most Americans, that means saving somewhere between $10,000 and $25,000. Start there. Don't skip this. This step makes more people wealthy than almost anything else, and it's the one most people skip. If you have credit card debt, which averages around 20 to 24% interest in the US right now, no investment on earth can beat that. The stock market returns about 10% per year on average. Your credit card is charging you 22%. Paying off that debt is a guaranteed 22% return. Nothing in the stock market gives you that. Wipe it out, then move forward. If your employer offers a 401k match, this is the single best investment available to any American worker. Here's how it works. Your company matches your contributions up to a certain percentage. Most companies match 3 to 6% of your salary. That is an instant 50 to 100% return on your money before the market even does anything. Not taking this match is literally leaving free money on the table. Contribute at least enough to get the full match every single paycheck. Now we go deeper into retirement accounts, specifically your Roth IRA or traditional IRA. In 2025, you can contribute up to $7,000 per year into a Roth IRA. Why does this matter? Because inside a Roth IRA, your money grows completely tax-free. You pay no capital gains tax, no income tax on withdrawals in retirement. Let me show you the power of this. If a 25-year-old puts $500 a month into a Roth IRA earning 10% annually, by age 65, that becomes over $3.1 million, tax-free. This is not a maybe, this is math. Now here is where most people think they need to get complicated. Picking stocks, watching charts, following tips. Stop. You don't need any of that. The smartest, most proven investment for the average person is a simple S&P 500 index fund, like VOO or VTI from Vanguard. You're buying a tiny piece of the 500 biggest companies in America. Apple, Microsoft, Amazon, all in one fund. Low fees, no stock picking, historically averages 10% per year over the long term. Even Warren Buffett, the greatest investor alive, recommends index funds for regular investors. Once your foundation is solid, emergency fund set, debt gone, retirement accounts funded, index funds running, now you can look at real estate. Real estate builds wealth in 2 ways: rental income every month and appreciation over time. The average American home has doubled in value roughly every 18 to 20 years. You can start with a primary residence, a rental property, or even REITs, real estate investment trusts, which let you invest in real estate through the stock market with as little as $10. Real estate is powerful, but only after your financial foundation is in place. Now we get to what most beginners jump to first: individual stocks and crypto. And here's the truth. There's nothing wrong with either of these, but they belong at the end of your investment order, not the beginning. Individual stocks require real research. Crypto is highly volatile. It can drop 50% in weeks. The rule is simple. Never invest more than 5 to 10% of your portfolio here. This is your high-risk, high-reward bucket. Use it for excitement if you want, but never build your future on it. Let's bring it all together. Here is the smartest order to invest your money. Step 1. Build a 3 to 6 month emergency fund. Step 2. Pay off all high-interest debt. Step 3. Get your full employer 401k match. Step 4. max out your Roth IRA. Step 5, invest in S&P 500 index funds. Step 6, real estate. Step 7, individual stocks and crypto. Follow this order and you will be ahead of 95% of Americans. Skip around and you'll spend years wondering why your money isn't growing. If this video gave you value, like it, share it with someone who needs to hear this, and subscribe to Finance Systems for weekly content that actually moves your financial life forward. My name is MG, and I'll see you in the next one.